Good day, good day. Hope we all good. In one of the videos, I mentioned something about failed patterns. So, when we talk about patterns, this is basically like Btmm stuff, right? So, from my own understanding, when we talk about patterns, we're talking about M's, we talking about W's. This is just like the basis, the simplest form of trading, M's and W's. So, what is a failed pattern, or how do we know that a pattern has failed? So, sometimes it can be easy to see price forming a first leg, easy to see price forming a second leg, uh, making us believe that it's an M. Then we might look to execute looking for something like this, right? Looking for something like this, then a possible reversal. And if it's a W, we might see price create the first leg, second leg, and we might execute anticipating something like this. So a failed pattern, basically what it means is price will create the first leg, second leg, show signs of wanting to come down, then fail. Okay. Then when it fails, it simply means it's pushing up. How do you know that the price is failed? You know by seeing the price break a level. You know by seeing price rejecting something, maybe forming a certain candlestick pattern, which you know, showing signs of coming back up here. Sometimes you should just be in mind that there's variations because price might do this, right? Then you think it's a failed pattern, then it comes up, creates a third leg, then it drops. So you should just pay attention to how price reacts to that level of equal highs. This is like for a failed M, and for a failed W, it's just the same thing. Price will create first leg, second leg, show signs of wanting to come up, then it will just fail and break this level. And again, sometimes price will come first leg, second leg. You might think it's failed. You just need to watch how price reacts on this zone here. So let's go to the charts and see an example of how some patterns failed today. I think I saw something on EU and GU. So I'm just going to look at those two. So we're going to go to M15. This is for day trading, and this is mainly visible on the M15 chart. Maybe M30, but personally for me, it's more visible on the M15. So jumping onto the M15, you see this was today's price action. So I'll just be quick, right? So firstly, price created first leg, London session, second leg, New York session. Then as it broke here, you can see price couldn't break this level. They couldn't break here. They bounced off the Asian highs. They are also bouncing off the previous day's high. They're also bouncing off the 50 EMA, and they're also throwing a sharp fin right on the 50 static. So soon as this candle closes, this candlestick, when it closes, TDI will confirm here a sharp fin. So that will give you a clue that, okay, you know what, this price or this pattern is a failed M. So you might look to, let's say you had sold from the top. There is nothing wrong with taking profit on the next level where liquidity can be actually taken. Then you can consider buying here. Then you want to see how price reacts here. As you can see, we had a huge aggressive candle going into the zone, broke, and actually retested that zone for a continuation up. So this is one example of a failed M pattern. If you are looking at the chart, at this chart as it is forming, it was actually looking like this. You see, that will be an M with two legs, but then it fails. Okay, so that was a good example of a failed M. Let's quickly check GU. Okay, so GU, more or less the same thing. So what we had on GU, again, first leg, you see we've got confluence, we've got a hesitation point, we've got the previous day's high. So at some point, this could have looked like a valid M, right? Nothing wrong with that. You could have executed from the top. But look at what happens. So price comes, takes out this, but they fail to take out this. So you could call this the neckline. So an M pattern is like this, right? You could call this the neckline. So what you want is price to break, retest, and continue dropping if it's a valid M. Then if it's invalid, you see price struggling to break this neckline or whatever you want to call it, that zone. Price will struggle. So with first leg, second leg, could have taken sales here, maybe taking sales here, looking for price to come down. But what you notice is price got right here and rejected, closed back above the 13 EMA. So now we're watching this zone, right? Is it going to be 3 hits coming down or it's an aggression? But at the same time, you already understand that, okay, we had a huge bullish engulfing candle. We're rejecting the 200 EMA with 3 hits, right, on the 200 on each session. TDI also gives you a bounce, right, on the 50 static after this candlestick closes. So you can still take buys here. Stop loss you can put outside the range, or you can put somewhere in there depending with your entry criteria. So this was another failed M pattern. So while we're talking about patterns, let me quickly show you a pattern which shows equal highs, 3 hits. 3 hits. So it looked like an M. The price came to the same level, but it didn't break. It just gave 3 hits. Then it turned, came back down. So I think I saw it on USD CAD, if I'm not mistaken. I'm just going to confirm. Right, let's just wait for it. Right, so here's another example. Okay, so I want you to check this out. So on this particular example, we had the first leg, second leg. So we could have sold from here, right? Remember, we're trading MZWs. Our TP is always the next zone where liquidity can be grabbed. So what I want you to notice on this particular example is price actually broke the neckline, came all the way back above. Then they threw one aggressive candle all the way back up. But I also want you to notice that they didn't break the high. Then from there again, the reverse came back and closed what? Below the 13 EMA. So at this point, what you want to look is TDI confirmation is to show you that price is either going up or coming down. So on this particular one, you might have maybe looked at this, but if you notice the close above the 13 EMA was way too far. So sometimes you want to wait for a retracement. But as price is retracing, what you want to notice, what has price shown you? It has shown you the first leg, second leg. It has broken the neckline. This is what do you call it? This is willingness. Price is showing willingness to come down. So this, you should actually just use your discretion, and maybe through screen time, you understand that some setups you have to wait, some setups you just have to execute and see whether they'll play out or they will hit your stop loss. So these were the examples I wanted to show today. I don't think there's anything else, or just because of time. Let me see, GBP SDG. Do I have it here? Nah, I don't. There's another asset I wanted to show you which had the same pattern. But anyways, all good, all good. I think someone mentioned something on EuroCAD. Somebody mentioned something on EuroCAD. Okay, there it is. Let me see if I can check what was going on with it. let's see. So this session is just rushed. I was just showing you like an example based on what I saw today. I wasn't looking at many things based on what I was looking at. So I just thought, let me do a quick video maybe to help somebody. But again, you just have to back test and check for yourself, or just watch price as it plays out. Okay, this is another example I wanted to show. Like I said, these variations, right? These variations. So on this particular one, first leg, second leg was extended just above the first leg. And again, this one broke the structure, right? But you want to see how price reacts when it gets here. Is it going to reject and come down and close below the 13? Or is it going to push up, break, or show a retest or something? So the rejection here was on the 50 EMA, and it was on the London session, and it was on the previous D's high. Remember, it's the same as the Euro USD one or the GBP USD one. So let's say you're anticipating sales. First leg, second leg, you might have sold, looking to take profit here. Nothing wrong with that. On the buys now, you might have considered a buy here. TDI rejecting the 50 static. If you're in the buy, you want to see how price rejects here, right? If they show a rejection, then you want to maybe close at break even or take small profits or maybe a small loss. So there is variations to how price moves, or there's variations to these patterns. All you need to do is be flexible to trade either way. Be flexible to be patient, at least for a candlestick to close, and be patient to get proper confirmations to confirm whether you're getting a sell here, whether it's going to be 3 hits. If it's 3 hits, you need a confirmation on TDI. Here we didn't have anything, right? If it's a buy, you want confluences. Yesterday's high, Asian high, 50 EMA, TDI confirmation. You see, those are all confluences lining up. So this is what I wanted to share today. I hope it helps somebody. It was just quick, but if you guys want us to go more into failed patterns or how to spot them, certain confluences which we need to look for, just let me know. And it also comes with timing. Those are all the other things you need to know. So just let me know, then maybe we can do a couple more videos just to show these failed patterns and how to trade the failed patterns. If this video was helpful to you, just leave us a comment. If there's something you want us to add, just leave us a comment. If you haven't yet subscribed, please do subscribe, like, and share. Good trading.